Hello, my name is Larry Warshauer. I'm a former investor in a company, a hedge fund, Titan Asset Management Fund, which was headed up by Jamaal Ghauri and Alex Scharf. That company started in May of 2025 and closed. That fund closed in the beginning of January 2026, losing for investors over 90% of their money in just 7 months. And you say, wow, that's a pretty bad fund. And you say, well, why would anybody want to invest in that fund? I mean, if they were such bad traders, why would anybody give them any money? Well, the way they marketed their company was, they told you, I talked to them early April, they said they were just starting up their fund, they're soon going to start to trade in May, and they wanted me to give them $100,000. I said, I can't do that, I don't know you, you don't have a track record, but I would start off with $50,000, but you have to prove to me that you're good traders, and they claimed they did. The way they claimed they did was, they said, one, you can call up our lawyer, we're a legitimate hedge fund. I called up the lawyer, said, yes, they're just starting up, but they're a legitimate hedge fund. I called up NAV Consulting, which is a company that's going to monitor their performance and make graphs for everyone. They'll make reports and show you graphs of how your fund has been doing with these graphs, right? So that's what NAV Consulting was going to do. But they also said we ordered our trades by a company called Alphaverifications. So it's alphaverifications.com, and it's headed up by a man named Michael W. Hultzapple, CPA. Hultzapple is Hultzapple, Michael. And he is the one that created these reports, and these reports give you the impression that they're excellent traders. Mike created a report, for example, before this company went public, it was private, and they had done trading on Robinhood brokerage firm, and Jamaal was a trader, and from January 1, 2025 to March 31, 2025, Mike created a report that said Jamaal's trading resulted in an 18.21% gain, which jives with what Jamaal and Alex were saying, that they're excellent traders, they're going to get on average about 61% a year, which is amazing. Let's get involved, right? So I said to Alex, how do we get involved? And he said, well, send me a check for $50,000 and we'll start trading with you. Okay. So I sent them a check for $50,000 and they start trading with me. I asked Alex about a month later, how's the fund doing? He says it's up 8%. I said, well, that's great. That's amazing. So when I got the report on June 30th, I was totally shocked. By NAV Consulting sent me a report that said I was down 14%. Now that did not jive with the report that Mike Hultzapple had created. Mike Hultzapple created a report that said from May 8th to June 30th, the fund was up 8%. And you say, well, how could that be? Why would the company telling me they're up 8%, why would Mike's report say they're up 8%? But the actual company that writes the graph of how your performance is done in your own portfolio says I'm down 14%. What's the problem here? And the problem is the way the company, Titan Asset Management Fund, asked Mike to create the reports. He creates these reports not telling you what the trading results were. That's really unknown based on his reports. His reports, I have, these are the letters from Mike. The Mike Alphaverifications, right? What it says is, and this is important, Mike writes, we believe our examination provides a reasonable basis for our opinion. Okay? But in this piece of paper, what it says is, it says, the returns have been prepared using the following methodologies consistently applied. This is the key. Other methods may produce different results. So normally when you're looking for a financial report, you're looking, well, what did they start off that month with? What did they end up with that month? So was the trading profitable or not profitable? So I started with $10,000. Now I have $11,000 in the account. That means the fund is up 10%. That's what you're looking for in the trades, the history of the trades. Now there might be fees that you're deducting from that, but you at least expect that the history of the trades will be accurate, right? But the way Mike phrases what he's doing, he says, performance is net of transaction costs and gross investment management fees. Okay, but then he writes, performance is calculated using the time-weighted rate of return methodology. Monthly returns are geometrically linked to produce annual and year-to-date returns. Performance includes realized and unrealized gains and losses and dividends reinvested. So the point is, he's telling you that you're up 8%, but the reality is the trading was down. Mike said in his report that it was up 8%. If you actually look at the trading, they lost $10,000 in those period from May 8th to June 30th. And it was like $5,000 in commissions. But the real problem was that if you looked at the next report, the report that Mike created in September 30th, Mike said that they had basically broke even, but in reality, they lost $1.6 million in trading, and there was over $100,000 in commissions that the investor had to pay. So there was no gains. There was no gains. And Mike's reports don't show you these tremendous losses. There was losses of $1.6 million, but Mike's still running a report that they broke even. It's not an accurate way of looking at life. He even acknowledges it. He says, other methods may produce different results, meaning, yeah, if you really look at the real way they traded, yeah, it would produce a different result, that they lost $1.6 million, which is a lot of money. And it got worse because they didn't really know what they were doing, these traders. But you couldn't tell that from Mike's reports. You just couldn't tell. You keep on looking at Mike's reports and they say they're doing okay. I wrote to Mike in November saying, Mike, these people are not telling the truth about how they're really trading. Please don't work with them anymore. And Mike wrote to me, he says, I won't work with them anymore. But then lo and behold, in December, Mike writes the last report for them, saying, hey, they've lost 91% of their money. And then you call up the company and they said, yeah, we're going to close the fund. Do you want your little bit back? I said, yeah, I want my little bit back. So I invested $50,000 and they sent me back, I think, $3,655. So I lost 47% of my, 97% of my money. No, 94% of my money. I lost 94% of my money in 7 months, largely because I was believing Mike's reports. Mike's reports gave you the impression they were profitable, and they weren't. This methodology he uses is not reflecting what they traded, the health of the company, and that's what you expect from a CPA, to give you an honest evaluation of the health of the company and how they're trading. And even Mike writes in his own piece of paper, I'm reading it right here, it says, other methods may produce different results. Yeah, Mike, if you would have told the investors, hey, they've lost in their trading $10,000 in that last month. They've lost in that quarter from July 1st to September 30th $1.6 million and cost the investor over $100,000 in commissions. Yeah, maybe you would have had honest reports, and then maybe investors wouldn't have been fooled to stay in the fund until it finally lost all its money. And the sad part is you even acknowledged on November that you would stop working with them. I have an email from you, I'll stop working with them. I don't need this. But you still took the money from them and you created the final report on December 31st. And it showed that they lost 91% of the money in that quarter and they're closing the fund. Right? That's what they tell you, then they're closing the fund. But you contributed to all that because you were the one that wrote these reports. If you would have written different reports, like you say here, other methods may produce different results. You put it right in the piece of paper because you knew that they were really losing money. But the way you phrased it, because this is what they told you to write, was to come up with this amazing methodology of showing that they were actually profitable when they weren't. So this is my review of dealing with Mike Hultzapple of Alphaverifications.com, and if I was going to hire him, I wouldn't. I want to expect from a CPA an understanding that you have a responsibility to show the public what's really happening here, and not just write whatever the company's telling you to write so it looks rosy when in reality everyone's losing their shirt. Mike knew they were losing their shirt. That's why Mike wrote, other methods may produce different results. Because if you just would have listed the history of the trades, everyone would have seen that they're losing their shirt all the time. They never had an up day ever, with my account anyway. If you looked at the NAV Consulting graph, from the day one, from May 8th to June 30th, it was like this. Straight down. Straight down. Mike's, the company said I was up 8%. Mike's report said the company's up 8%. My report, my fund was down 14%. I lost 14% of my money, even though they're telling me I'm up 8%. Right? So it wasn't a good way to report things. It wasn't, in my opinion, an ethical way to report things. And now, unfortunately, I've lost $47,000. Other people have lost much more money because they were actually trusting Mike's reports, just like I trusted Mike's reports. Other people gave them a lot more money than my $50,000. Some people gave them $200,000, and they lost like 90% of their money. This is all due, in my opinion, to one, the company itself, Titan Asset Management Company, telling you basically falsehoods, not revealing their fees, and not explaining that they're not as good of a trader as they say they are. Because the history of how they actually traded in those accounts with Interactive Brokers, I have the history of all the trades. They lost in that first quarter from July 1st to September 30th, $1.6 million, and Mike's reporting did not reflect that. So that's my experience dealing with Michael Hultzapple and Alpha Verifications. Thank you very much. Bye-bye.